Well, Angelo Coppola now joins us in Johannesburg with an update, of course, on this deal. Angelo, as usual, welcome to the show. Now, why is this deal considered a first of its kind between the EU and the African region? Give us some insight into what makes this deal different. And it looks like we actually have lost Angelo there. Well, let's head to another region. Borrowers in Uganda are anticipating cheaper loans after the central bank cut its prime lending rates for the second time this year. Now, Bank of Uganda has reduced the benchmark lending rate to 15%, responding to an improvement in the country's inflation outlook. The bank says the latest monetary policy decision is aimed at stimulating economic activity. In April, the central bank made a surprise cut, lowering the rate to 16% from 17%, saying it needed to boost growth. Bank of Uganda says the economy will continue to grow at a moderate pace and is projected to expand by 4.6%, down from an earlier projection of 5%, mainly, of course, attributed to the weak global economic environment. Of course, soft commodity prices and tight financial conditions factor in as well.
The easing is more to do with trying really to stimulate activity, including borrowing. Now, it could be that as you try to do that, there could be some spillover into the exchange rate.
Going forward, economic activity is expected to improve, with domestic demand being the key contributor to economic growth amidst continued weakness in the external sector.
Now, Michael Baleke joins us in Kampala with some insight into this decision. Michael, welcome to the show. Now, of course, this decision came as a bit of a surprise, as it's the second time this year we're seeing the central bank sort of easing, and some believe monetary easing is premature, of course, if you consider high core inflation in the country. Now, what was behind the decision to ease this time?
Hello, Uche. Despite the high inflation, Bank of Uganda says the economy is showing positive signs of growth, and not exactly what should be expected, but it is picking up slowly, and they project it is going to expand further. Now, the central bank believes if they slowly but surely reduce the benchmark lending rate, they will provide the much-needed push for local businesses to jumpstart the economy. Why local businesses? They say the projected growth in the economic activity will be due to an improvement in domestic demand because of the continued weakness in the global economic environment. However, which the Bank of Uganda says the growth, well, the true effects of this growth will be visible towards the end of 2016 and the start of 2017.
Now, Michael, the central bank also reduced the discount rate and, of course, the bank rate to, they plan to trigger a drop in commercial interest rates and, of course, unlock cheaper liquidity in the banking system. Now, what has been the reaction to this news, especially in the banking sector?
Uche, the reactions from the business community are still, is still lukewarm. There's a general belief that even when the central bank makes these changes, interest rates in commercial banks remain quite very high. So they believe the discount rate by the Bank of Uganda is not significant enough to push banks to cut their lending rates. Also, Uche, Bank of Uganda's policy stance has been largely viewed by the business community here as a move to stabilize the local currency. The Uganda shilling was at its worst last September, when the Bank of Uganda raised its benchmark lending rate to 17%. But in recent months, we have seen the currency gain, and the reason for this probably this current ease, which entrepreneurs say will not change much. Uche?
Now, Michael, the country's banking sector has been in the limelight, with President Museveni saying he is investigating extortion within some banks and, of course, people complaining of high interest rates. Where really does the problem lie?
Uche, President Museveni says banks are not advising their customers enough as they seek to borrow money, that persons, even those who obviously do not qualify as long as they have security for they can get credit from these banks. Now, Mr. Museveni says behind these credits there are hidden costs that are not revealed once the client defaults. And of course, when they default, the banks or their officers in this case take advantage of such people to repossess their properties without negotiation. Let me take you back. A recent report by Central Bank shows that actually a huge chunk of the bad loans comes from the agriculture sector. Now, many of the people in this sector are not educated. They don't, in many cases, understand what they're signing, and many times they're desperate for money. But the Bankers Association, of course, has denied the extortion claims that banks are regulated and they follow strict consumer protection rules and guidelines, but these incidences of people losing their properties to banks are widespread in this part of the world, and they go, of course, undocumented. And the President Museveni is not happy about it, and he believes an investigation should be put up into these banks.
Well, many thanks, Michael, for those insights. Of course, Michael Baleke joining us in Uganda.